can't get rid of this shit.
So Jamie's saying their COO leaving the company, golf like a
All right. Are we on? You guys can hear me? Oh, good, good. All right, I didn't know. Perfect. How's everybody doing? Did I post the shit here? Hold on. I think I got everything. Hold on 1 second. Okay. All right. Yeah, yeah. Really interesting day. Started off pretty lax, to tell you the truth. There was some bull flow in a lot of the same areas we've been seeing. But as far as for like intraday momentum purposes, there really wasn't too much going on because a lot of the stuff we kind of been talking about the last couple of weeks being at okay spots, trade tactical from a tactical point of view, because you had a little bit of a pullback, a little bit of consolidation. You had some nice pops out there, whichever, some pop more than others, but for the majority of them, a lot of the better looking names, they had a nice pop. So we got to the point again where I think things at the least are going to be really, really tricky in some of the overpopulated spots of this market, kind of like we were talking about, right? Names that will still find buyers off pullbacks, names that have been up a lot for a good portion of the year. They're crowded, right? Because they were small pockets of the market, a lot of bulls crowded in these areas. And I just think that it's going to be a lot difficult to find that second leg of follow through in a lot of these areas. Eventually, I'm at some point you're going to see them, but it's really difficult, really tricky to figure out where. And a lot of people who chase, right, kind of what we were talking about. Anybody who's chasing a lot of these crowded names because they think they're alive again and going to pull off another parabolic move immediately, they're going to catch days like this, like today, which again, short dated calls, you're dead, right? Um, and if you're greedy and don't sell the pop, same thing, you're going to lose your money. So I think the market gets a lot trickier in that sense. But what I think we've been seeing, and we kind of needed to see, right, if the market was going to hold up, was that rotation. Now, that rotation um, of recent has been primarily in a lot of commodity related spots, right? And a lot of these commodity spots have been serious laggards, okay? But for whatever reason, inflation, a little tick higher, right? Whatever excuse they can find, there's been a nice bid in these names, right? We've talked about like a Freeport, FCX, a Southern Copper, the gold and gold miners have been ripping over the past couple of weeks. Industrial names that we never heard of, electrical, shit like that, just continue to go higher. So we have been seeing rotation. I just think at this point of more recent, the the rotation has become thinner, right? In a sense to where it's been solely commodity energy names. I left out energy names. I mean, have you looked at a chart of MPC recently? Incredible. It looks like Nvidia Light, you know? So, there too, they got a little bit ahead of themselves where they can go into a possible breather mode. But let's take a peek at some of the big picture signals because I think that's more important here. Did I exit out? No, I couldn't have. Here we go. All right. So let's touch on. All right. Let's start overall here. Right. This is. I wouldn't put in the concern department yet. We'll see after today's action what it looks like. But we were talking about it Sunday night. We were seeing a little divergence here. Okay. These are credit default swaps. And if you remember, what we've been talking about every Thursday was that, no, every time the market ripped, these things unwound and made a new low. And every time the market had a little dip, you couldn't even really pick it up on the chart, right? Show up for one day, you see a little blip, and that's it, washed out. And what we've been seeing over, I would say, the last week is even with the market rallying, okay, or not selling off, and you can see down here, we started to see a little divergence here in the credit markets, right? So pricing in a little bit of risk. Now, granted, okay, it's minimal to this point, okay? But the reason I bring it up is a lot of times when you see that, it is normal to see a little bit of a rinse on a short term basis. Okay. So, in other words, based on my recollection, when I've seen this type of divergence, even in a strong bull trend, you would see a couple days, maybe a week, a down week in a sense, and then right back to the same old game plan, right? You would see that get unwound and the markets would eventually regain their footing. Okay. What's interesting today is you had this sell off, which definitely looked and felt a little bit different. And I mean, if you ask me, it was based off that Israeli headline, right? Where you might have some retaliation from Iran because of what the Israelis have done recently. So, again, a geopolitical event type thing in where you got a little more teeth behind the selling that we saw today. So I want to see what these credit and a lot of these credit spreads and default swaps end up when they update in a little bit, just to get an idea to see if there was some concern in the credit markets as well. Okay, because I don't think the Fed speak, maybe it played a little bit of part of it today, but I don't think the Fed speak played a part in it today. And the reason why I don't is Bitcoin actually was up and strong today, right? Gold for the majority of the day was holding its own, up and maybe close a little bit lower on the session after a huge rip over the last couple of weeks. So you had that flight to protection sort of thing, and so just it. I had the sense that it felt more of a geopolitical type thing as opposed to just Fed speak talking about, oh, we're not going to cut rates, right? Because I think the market really doesn't give a rat's ass anymore. All these Fed members, even non-voting members, can say all they want, right? But the market is not going to forget that they've been singing this same tune over and over and over again, and then you got Powell who does and talks a completely different game, right? And remember the narrative out there. Okay. The narrative out there has been, and this is why things have been so bullish, that if the economy takes a turn for the worse or any signs of it, even starting, okay, Powell wants to cut rates. He's looking for any excuse to cut rates. He flat out told us that. Okay. As a matter of fact, the only reason why they haven't cut rates yet is because the economy has been so resilient. I mean, some of us find it absurd that he's even talking about cutting rates. Okay. So it's pretty clear message that he's eager to cut rates. So if the economy does show any cracks, you're going to get rate cuts, right? You're going to get a Fed reaction to it. Um, and on top of that, even though inflation looks a little bit sticky and they're allowing it to run hot, being whatever, an election year. So you may get a situation where they want to try to run the economy hot. They let inflation run a little bit on the hot side for the rest of the year, and that's a sweet spot for the market, right? So that's that Fed put that's at play. The only thing that can get in the way of that Fed put, right, and change that narrative is one, if inflation gets really out of control, okay, and the Fed actually has to do something about it. Okay, not just inflation being too hot for some of us, okay, but the Fed reacting to that inflation, okay, or you get some sort of exogenous event, credit event, where the market now feels the Fed is too behind the curve and need to get aggressive in easing and providing liquidity, right? So until we see that enter the picture, that narrative is still out there, right? That Fed put narrative. And what that equates to in price action terms, especially with how positioning is set up, means that a lot of these pullbacks are going to remain shallow and short, right? Doesn't mean the market can't pull back, right? Market could pull back in the most bullish of setups, okay? But what the narrative is telling us now is that those pullbacks, there's a higher probability of finding buyers into those pullbacks than added sellers, okay? So that's the narrative that's out there. And so we're keeping an eye on two things, right? We're keeping an eye on one, the Fed changing the playbook or any signs of it. And we will see it in a lot of our signals if they do decide to do that. That's not out there, no matter what Fed speak we got today. So forget about that, okay? And the other narrative, which nobody can control, is you got some sort of holy war that breaks out that becomes a major, major problem, right? Or something else, right? If it's not that. But again, we not only will hear about it, but us, especially in the steam room, our credit market signals are going to elaborate that information and tell us whether we need to be concerned about it or not. Okay. And what it would mean in the credit default swaps, like we spoke about, you will see this start to accelerate to the upside in a meaningful way. Okay. And all that it's going to simply tell us is this: okay, we cannot buy this dip right now. We have to sit on our hands, allow things to play out. Okay. And what likely happens is the Fed gets aggressive, or the Fed does something, implements something, right? Or the Treasury implements something, and the credit markets are appeased, and you can start buying off that pullback. but we don't want to get in the middle of catching that falling knife if the credit markets are signaling to us we shouldn't be doing that yet. Okay? So this is good, right? No matter, even if we're in a melt up stage, which we still could be in, right? This day like today means nothing in a melt up state. Okay, melt up state doesn't mean you never have down days or down weeks. A melt up state means that that bull run continues without any sort of correction. Right? Throughout the late 90s, those of you who were around, we were talking about it, but I can tell you from my experience, there were plenty of shakeouts. Right? And that's one of the biggest melt ups ever into that 2000 top. There were plenty of shakeouts. And by the time it was all said and done, every investor and trader out there was trained not to sell off any of those shakeouts because they ripped back to new highs and then some. Until finally March 2000, it didn't and caught everybody. Okay? So the point I'm making is these rinses are totally normal, right? Especially in crowded stuff like we have right now. What we're paying attention to is when we get those rinses, or is it just another opportunity to get long or find some long opportunities? Or is it that one time we need to sit on our hands and allow it to play out, right? So that's what we want to see here. Okay? That's what we want to see here. In the meantime, okay, as we've been talking about the last couple of weeks, because we have no signals of caution going on, right? Again, we'll see what today looks like, but up till now, there really isn't any cautionary flags out there. There's two words out there in the market that we've been talking about, and one is that crowded quality momentum area, right? Gets lumped into that quality momentum basket. Those are stocks that basically have been up in a straight line. Those are AI semiconductors that everybody loves for good reason. Okay. They are likely, well, we already know they're in some sort of digestion. It's just a matter of how long that digestion lasts, right? And the prudent way to approach these digestive phases, especially if you're an options player, is one, you try to just sit on the sidelines and allow it to digest, right? And look for new setups off that digestion. Or, like we've been saying, you can trade these names on an extremely tactical time frame. Okay. Now, again, that's easier said than done, right? Some may have more faith in their trading skills than others. Right? For me, especially a lot of these names, Nvidia, SMCI, I'm not afraid to admit it. It's above my pay grade. I cannot tactically trade these names. They're really, really difficult for me. They're way too fast for me, right? I cannot manage my risk like I would like to in these names, okay? I'm not shy to admit that. But if you do like to trade these names, if that's your game, it's more difficult now. It's not last month. It's not 2 months ago. It's not the same market we were in where these things just went straight up and you can chase an SMCI up $60 and it goes up another 150, right? So you have to try to buy these things off pullbacks and sell the rips. Okay? Doesn't mean every trade is going to be a winner, right? I think the toughest part, especially about that philosophy, is that you buy the pullback, you get a bounce. You don't really know how much of a bounce you're going to get, right? So unless you're extremely quick, you'll get a bigger bang for your buck, a bigger bounce than others, and that's what makes it really tricky. Okay, I'll give you an example. Dell, okay, here, nice pullback, downside niner, right? We talked about. Me personally, if I'm playing these things here, right? Because there's a chance they're in consolidation, I'm selling this rip here. Okay. Now, most of the riffraff and the new traders out there who think they're Paul Tudor Jones already will try to troll me because there's more after that move, right? But you got names like this, okay, where AMD into the very similar spot, but nowhere near the bounce. And after that was done, it rolls over here, right? So that's the tough part here. And there really is no rhyme or reason. It's more luck, in my opinion, than anything else. Some will bounce harder than others. Some will look like they're breaking out again, only to get torn back into consolidation. But as a group, it's pretty evident they're likely in consolidation here, right? So you have to treat them all like that, in my opinion. That's the difficult part. Okay? But it's the only way you can play these things right now if you want to play them. The only way. And that's long and short because it's just as difficult. Just as difficult. Like, for example, now, right? You get, let's say, another day, morning of selling tomorrow, and you see sweeper activity that kind of impresses you coming into any of these names. If you're trading them, that's where you need to buy them. Again, whether they end up being a winner or not is irrelevant to me, right? Because again, there are going to be losers no matter what. But you have a higher probability of success than chasing the rip, thinking it's going to go, right? Chasing the Dell move here, thinking it's going to break out again. Because a lot of these things are in consolidation. That's the point I'm trying to make. And the same thing goes on the short side, right? You have to actually short into these rallies. We know that's not easy. And cover into the sell-offs. Right? That's the likely scenario, the way these things play out. Now, again, you get Iran fucking gets frisky and bombs Israel, turns into a shit show. Again, you could get the whole market correct, right? And then they all roll over. But that's that event and that's catalyst that you can't handicap. Anybody who's tried to handicap it already got burnt losing money. Okay, because we've had plenty of catalysts for bearish price action that just went poof and vanished. Okay, so that being said, right, I think that what the beauty of this market that we've been in is that while you had to be extremely nimble in these areas, there were other areas where you could be a little more patient in. Okay, because money has been rotating, right, from some of these names, not aggressively, but they've been used as a source of funds. So in other words, they've been buying AMD for 4 straight months up in a straight line. Now they're locking in some profit and they're rotating into a Freeport that's been stuck in consolidation for so long, right? And the economy still showing resiliency, right? Copper showing signs of life. Nobody owns this Freeport. Okay? So you get these cleaner moves. Right? Same thing goes for the gold miners and stuff like that. Again, the issue of most recent here is that now you've had some big moves in a short amount of time here where it wouldn't be all that shocking if these things needed to rest a little bit. Right? So you've had other areas where you can look to kind of, again, those laggards in a sense, stuff that's not up and straight to the right. But because of the market rally because of the rally in these things, they could use a rest as well now. Okay. Aside from the rotation, right? A lot of us, and this is something we've been talking about ad nauseum, we would like to see new names emerge, right? That's the healthiest sign of a bull market. New names, right? New setups, stocks that not everybody is aware of, that meet that same criteria, profitable growth, right? You guys have been talking about a name like this, like the Shark Ninja. Okay. Why we like these areas? Because if that institutional money is looking to find new spots, right? They're looking to find different areas to put their money in, come out of the crowded stuff. There are no sellers in these things. And you get that smoother trip. Okay. The problem has been we don't have a lot of these names. All right, that's been a big, big problem in this whole bull phase we've been in, going back to October 2022. Now, off the lows in last October, we've seen an improvement, right? We've seen a lot more of these type of names show up, but there's still a lack of them, right? And the reason being is there's not a lot of these names that are profitable with sexy growth rates. It's all been in the large caps primarily. But that's the next stage, in my opinion, of this bull move, if there is a next stage. Okay, because nothing goes up straight forever, and you get these digestive periods, and money's got to find new areas to go into. Otherwise, you get corrections. That's how corrections start up. All right, so again, just things we're keeping an eye on now, right? Energy, right? Even you guys, I mean, a few of the names you guys were talking about. You guys know this name is my favorite of the bunch. Look at this. I mean, this is like out of control now, right? Out of control. Oxy, they're still buying Oxy. As of today, they were buying Oxy. Several of you like that name, right? They all look good. Okay, all these commodity names look good. All of them. Tech, that zinc play, they've all looked good. But again, it wouldn't shock me to see something like this again here. It would. I mean, that would be totally normal. Totally normal. Another name here, Steel Dynamics, right? That's the steel stud. Got a little breather here, another leg up. Look, you could see it lighting up red here, right? You've had quite the move. So I think that's the interesting dynamic that's at play here. Me personally, as a few of you know in the room, I've been playing gold miners, right? And what I'm trying to do in the gold miners is I'm willing to give up short term profits to try to cash a bigger ticket, right? So what I mean by that is like I own Nugget, okay? I got a little bit of cushion here. You guys know me. Usually I'm selling this. That's it. Case closed. I'm happy and I move on. Okay. This particular setup, I'm sitting in this thing willing to give up short term profits, willing to sit through pullbacks or consolidation chop, betting on we get a larger move. You understand? But I'm willing to do that. You got to be willing to do that, right? You can't be disgruntled if you get chop or a pullback in these things and be pissed off about it, because it would be normal, right? If you're concerned about that and you're in these things, you take the money and run. So I played the Nugget. I got JNUG. And the reason I did that is because they've been lighting up every gold miner under the sun. And for me to pick and choose which ones, it just drives me nuts. But if you guys need names that are catching flow, we spoke about them the last few weeks, and I can give them to you. AEM, this has been lit up. Puff Puff Pass, they lit this up. Even Barrick Gold, GOLD, which is a bit slower, this has been getting lit up. Newmont Mining, they're buying. Yeah, I'm probably forgetting. WPM, which is a silver miner. All right, so all these names have been lit up by sweepers. Lit up. The one name I did buy in the space is really speculative. It's a $2 stock. I keep forgetting the symbol. I can look it up in a second on my account. Is this it? No. So annoying. Hold on. There it is. I bought this guy. BTG. All right. Again, reason being, this thing is $2. All right. I'm looking to be a little bit patient with it. Maybe I get a $4 stock. Okay. So that's, to each their own, right? You may not like to trade these names. You may not be willing to sit through if these things go quiet, right? For that bigger reward. You might, if you're looking to remain tactical, you probably want to look in other places, right? But I still think like you could buy dips in a lot of these things, even for trades. Okay, so you get, let's say, a day or two of a pullback in Freeport. If we see sweepers come right back, you got to trade there. All right. Another area is this one here, CCJ and uranium. I own this one, and XE. Okay, so there are things to look at and do out there. It's just, I guess, you got to know your time frame and what you're looking to get out of these things, right? Again, I'm looking towards laggards right now. Um, they, gold miners have been overdue for a while for a big move. Last time I botched it, Nugget, I was in it. I was a little bit early, but I sold it too early, and I never regretted it because I wanted to try to catch a big move in it. If I don't, and I give up some of the short term profits, or I take some small losses, so be it. You know, but I'm not going to force myself. I'm not going to force myself to buy a crowded name that is in consolidation for a week and look for a larger move out of there. It's just not my thing. It's not my thing. Yeah, there's been all these metals and miners. There's been crazy action in these things, Khalid. Crazy, you know. So again, I think if you like trading these things, you still, off these little pullbacks that we get from time to time, you can look to trade these things if that's what you're looking to do. You want to be more nimble. Um, I'm just in the mood. I like this setup here where I'm in the mood to roll the dice and try to be patient enough to cash a big ticket if I get lucky. You know, that's sort of my outlook on it. All right. And so here's the thing that's really interesting here. Okay. So the credit markets we talked about, I think it's something to keep an eye on yet, but nothing really of concern yet. All right. Let's see how this shakes out. Um, Sharpies, right? We talk about them positioning commercial hedges in the futures market. They're one of our big picture indicators as well. If just to catch everybody up to date, the market has been in melt up, and Sharpie commercial hedgers have been holding long exposure while the market has continued to melt up. That is highly unusual. Okay, the likely reason why hedge funds are still short while we're in melt up mode. Okay, not much change there, as you can see. You had some small short covering by hedge funds, and Sharpies trimmed a little of their long exposure. Okay, the concern, especially on the short term basis, is these guys down here. These are the small specs. They've been bullish, okay, and have been rewarded, but they are bulled up, and it wouldn't be surprising you have a down week to shake some of these guys out. Okay, because that's all it takes is a down week to shake them out, especially in equities and options. A lot of the retail traders, they're in weeklies, tops, monthlies. All right, you got a couple down days, they're done. So that any bullish sentiment and positioning on that front, it doesn't take a whole lot to wipe out. Where hedge funds, they haven't been that different of late, but they got that conviction, right? And as you can see, they've been short from the summer of 2022 and have not flipped long yet, which is remarkable if you think about it. Okay? Think about that. The summer, right here, this low, where they started to get aggressive on the short side, they've remained short the whole entire way. And not only that, they got even more aggressive on the short side into the regional banking little crisis we had. That's why without that trigger, without that shock, you get these pullbacks and dips that are just short lived. because what's likely to happen if there's not that catalyst, they are likely to cover some of this short exposure into any weakness. You understand? And that's what we've been dealing with here. And you can see they did a little covering here recently. They're not as short as they've been, but they're still net short in futures. Okay. And here is in equities hedge funds. Very similar, right? I mean, the only difference is they flipped long for a short period of time once. Okay. But here is the recent low last year, October. You can see how they took the needle, got excited there on the short side, literally into the lows. Okay. They got squeezed and squeezed hard initially into the end of the year. Right. So into the start of this year. And then what they do, they shorted in January. They went right back on the short side and have remained short since. Okay, they covered here, they got squeezed, then they went back on the short side, and they've been getting squeezed again here. Okay, so same takeaway, same thesis. Without that catalyst, okay, for them to get short and stay short aggressively, they're likely going to cover or find long exposure into any little pullback. Okay, now on an extremely short-term basis, right? Let's say you get some headlines out of the Middle East or whatever the case, they may start to slap shorts on again, and that will weigh on the price action. This is big money, right? If they're aggressively slapping on shorts, you're going to see that effect on the price action in equities, right? Especially the equities that they're shorting. But what happens is when that runs its course, if the market turns around on their ass and starts to rally, then they get squeezed and they got to cover. And that adds fuel to the upside. And that's what's been happening. Right? And a lot of the stuff that they are short is, again, all the stuff we've been talking about, right? Their biggest short, their largest short position was in financials. Have you looked at those financials this year? Have you looked at a chart of JP Morgan and Citigroup? Right? They're short commodities. They were short out the eyeballs energy. So all the stuff that they were short has really tortured them of late. Okay. And this is another interesting chart here that I wanted to show you guys. This red line here, that's hedge funds. Okay. Net. Right. So you could see their net negative overall. Okay. This blue line, these are long only funds who don't short. Okay. And what's amazing to me is at the end of the year into the beginning of this year, for the first time throughout even that whole bear market, they did some buying. But since then, look what they've done. So you have a market here, okay, that is up in this territory, and funds in general, net, don't have any exposure. It's really difficult to get any momentum going on the sell side without the help of something going boom. Right? And you could make the case, even if something goes boom, okay, they're likely going to look to buy. That's probably what they're waiting for. They've been waiting for something to go boom for a while now. Right? So if you do have something that goes boom and you get a decent yank, they're likely going to look at it as an opportunity to get long something because they're not long anything. Now, again, this is a little misleading because it's not that these long only funds aren't long anything. Of course, they're long something. They've been primarily long the Mag 7 mega cap quality names. Okay, they started with just Mag 7 and they crowded just into those small amount of names. Okay, and then you saw the charts we looked at the beginning of this year, late last year. Mag 7 exposure was insane. It was insane. They were all in. That's where all the long money was. Okay, that Mag 7 trade busted up nicely. Right, you got Apple look like shit, Tesla looked like shit, Google went through periods of looking like shit. So it busted up that exposure, that crowded exposure there, right? And what they started to do is little by little, they started to move towards other large cap semis, large cap tech, right? You can see a lot of these stocks are up and to the right, their chart, up until recently. So that's what they've been buying, but it's not enough with all the money they have to move the needle. So they are ready to buy. They're probably looking for a pullback to buy into. Does the market give them that? The market don't like to willingly give them pullbacks when they're waiting for it. Okay, but the reason there's no guarantees is because something can happen. Even with this, right? You can't make the argument, oh, there'll never be a pullback because, God forbid you get a 9/11 style event or something, right? You think something goes into the Statue of Liberty, you're not going to get any selling because these guys don't have any exposure? That's foolish. And again, that's that exogenous shock that you can't handicap for. But without that, these guys are waiting for a pullback to get long. Right? See right here, I'm not making this chart up. So that's the setup we have right now. And I think that's basically it. Right? So let me see if I got an update on this a second. Hold on this one. What time is it? 5? I gotta run soon too here, so I can't I can't stay on per usual where I chit chat with you guys for a couple hours. Hold on. What's today's date? No, it didn't update yet. I'll post it on my regular. I'll post it on my Twitter when it updates. Even for some of you who aren't Steam Room members, and I'll throw the market updates in the Steam Room as usual. All right, but let's see where these ended up. Just curious. Yeah, the defense names have seen a little bit of flow. They've been acting okay. Again, they're never usually the smoothest of trades, but they look good. We saw this one caught the best looking sweep. It was one sweep, about 2 million. LMT. All right. Had a nice move recently here. Little breather here, which is totally normal. And then this thing was catching action today. RTX. That looks good. Has been moving here, right? These things have been. Here's, I think, the best one in the group. GD. And this thing has already, even prior to recently, saw some nice looking flow. The Yankees are off to a nice start, Khalid. All is well in the world. I'm waiting till Soto pulls a hammy and goes on the DL for a good 2 months. But I'm going to enjoy it while it lasts, But yeah, this GD is the best in the group. Again, you're chasing here though now, this is probably the best setup currently, because you didn't even break out here yet. But they all look good, right? No jinxes. They all look good. Again, this is another, even without the shit that's going on, this was another spot of possible rotation. These things haven't really done anything special. They were quiet, and they're seeing rotation. You can see that. What other names? Again, I mean, a lot of the names that we see action in, you probably don't have an interest in, like this name, Ambac. For whatever reason, they bought this dip, and we saw some more action in it today. AMBC. This is a name that's been seeing more play, had a nice bounce, but here upside niner. So again, it could breathe here. You had a nice move from this low. We talked about this name, HP, similar to the Dell. But if you get another pause here or pullback, you like it. Still looks good. What else? The energy names we talked about: gold miners, copper, play. I haven't seen anything in that. They had earnings recently, right? Oh yeah, that looks good to me. That's looked good, right? Again, here's a rotation name. You had a nice breakout. Yeah, looks good. Looks good, Tobias. Yeah, I ignored them, Khalib. The CGC, the action was hot in this name. I look at this. I totally ignored this. I don't like to play these names. You know, I know there's a bill or whatever legalizing in not Colorado, someplace, but and it's probably hot because of that. But this is. I haven't traded them in a while. I would day trade them here and there, but they haven't even been worth that up until recently. What we want to look for, as corny as it sounds, okay? And we've been talking about this, I don't know how long on this webinar, okay? Especially in the steam room, if you're watching the flow, you want to see sweepers come in, hit a name, and you want to see profits there and a nice juicy growth rate. Okay? That's what you want to see. And especially if you think you feel we're in a bull market, because that's the lifeblood of a bull market. When you start buying and you start playing names like, let's say, this, okay, that are losing all sorts of money, it's all story or all hype based off a bill, that's pure speculation. Right? That doesn't last. As soon as that momentum runs out, they're dead. They're dead. More than likely, they make new lows again. Look, disaster area, right? We want to find names that are making money and they're being bought for the right reasons. And what happens is when you find those names, especially in a bullish environment, this trip is a lot smoother, right? Like we talked about, right? That's where SMCI, forget about SMCI now. That egg already hatched and then some. But when we were talking about SMCI before anybody even knew who they were, the only reason we were talking about them is I had no idea what they do. I still don't know what they do, right? But they were profitable and their growth rate was insane. Insane, right? And that's why the stock, again, forget about recent. That's why the stock did this prior, okay? With no sellers. Now, again, you're not going to find a lot of these type of names, right? Especially with the economy, because there's not a whole lot of growth in the economy. That's the problem. But the few that do, because there's so little of them, those are what the institutions want to own, right? Here was another one, a net. We talked about it ad nauseum. What? Why? Profitable, crazy growth. Look at these numbers. They're not fake, right? The VRTs of the world, the APPs of the world. All these names, they go up. They go up for the right reasons. They go up for the right reasons. All the speculative stuff, the old Kathy names, the weed names, the short squeeze names. That's all they are. It's a short squeeze, some catalyst that's creating a short squeeze, and when that's done, they short the living shit out of it again. Yeah, I'm not. I tell you guys all the time, the reason why I've underperformed in this bull, again, I don't even throw this in bull market category based on what I've seen. Maybe a little more now than prior to the last October, but prior to the last October, this showed me no characteristics that I want to see in a bull market. None. Okay, it was a bull market in mega cap tech. That's where the bull market was primarily. But coming off the October lows last year, we see, we started to see some nice breadth. We started to see it spread out in a pretty meaningful way. Okay, but what we're still lacking is the new leaders that you see in a bull market. And again, the reason why I think we're lacking it is one, you don't have QE, right? And if you don't have QE, you need growth. You need growth in the economy. And right now, the names that are growing are the larger blue chip mega cap names. Right? So you get a name, an AI play like a Microsoft that's a beast, right? And they never lose money. Their growth sometimes is slower than other times, but they're always profitable. Okay, so you get money crowding into this, or you get a name like this, which is not making any money or growing, AI related, and looks like this. Right? But we've seen it little by little. We've seen it broaden out to a lot of these larger cap tech related names, and now we're seeing some of the power related names, energy related names, right? Data center ties, shit like that, like this guy, the VST, and that's what Goldman likes this trade. There are some that haven't done this yet. Um, but they think that quote unquote power trade, where that's what's behind a lot of this upside here, and they think now you see the tentacles spread out into like copper, and they like copper because of it, or the name that I played on the uranium side, this one, the NXE, where you start to see it spread out from there. But there hasn't been as much as we usually see in a strong bull market. There hasn't been a lot of new leadership. Yeah, I remember this name. Either somebody keeps bringing it up on these webinars, Khalid. Without a doubt, this is exactly what I'm talking about. Exactly. Exactly. Adrian, I think yes. I think it's a good dip buy. I really do. Again, does it rip and melt up and break out from here? I have no idea. Okay, but I think they still buy dips in IWM. You know, I still feel they still buy dips in IWM. Um, and again, you can trade it tactically. See, the problem is, especially even all of us, right? We want to find a spot in IWM and try to give it room to play catch up. That's where the problem has lied. Okay, because it just hasn't. It's been acting better, but I still think in this market, these dips will likely continue to be supported. Yeah, Ani, huge, huge, huge. I mean, that's been the best place to play the last couple of weeks. All commodities, all the commodity stuff. Alcoa, yep, all these names, all of them. Now, same thing here, right? Like these names are tougher because a lot of these are older names and they go through periods where they do better fundamentally than others. But you have studs out there, like right. If you want to buy steel, well, X is getting bought out, but like instead of speculating on an X, which has had a tough time, you look to the stud. Like this is the stud, Steel Dynamics. If steel is acting bullish, This thing is going higher, plain and simple. Right? Same analogy like I've been telling you guys with the MPC. Like if you want to make a bet on the energy sector and you're trying to, well, which stock should I buy? If you're right on energy and you want to get paid, this is the one to do it with. This is the one to do it with. Where other energy names you see sometimes they don't perform as well as you would like. This go around, it's been a lot better. All of them. This one, which was having a little bit of a tough time, is starting to look really good. Valero, have you seen this move? Look at these explosions, explosions. And if you don't like to play these names, I get it. I don't like playing energy names either. I really don't. Okay, but I'm saying in general, if you don't like to play the gold miners or commodities or any of that, that's fine. Okay, but what you have to try to do in the meantime, again, there's two things for us that we can do: either wait patiently and look for new ideas, again, like the TGLS that Khalid brought up, like the Shark Ninja that we spoke about here, right? But you want new names, okay? Not names that have been going up for the past year in the straight line, right? And if you don't see that, then you got to be patient and just try to be as nimble as you can in this tech space because it's digesting. It's digesting. See, ideally, what we would want to see is during this digestion, a fresh round of buying in new stuff, right? Names that weren't leading prior that we're starting to see catch flow and outperform, right? And their price actions constructive. That's ideal, you know. And again, the other stuff, the crowded stuff, I don't think they fall apart. I just think they're tougher to trade. If you're already in them from cheaper entries, you sit in them. No reason to sell, right? If you rolled up in options and you're sitting pretty with time, sit in them. You shouldn't be doing anything else. Okay. I'm talking about this is where a lot of people don't mention, and a lot of retail traders get themselves in trouble. I'm talking about new risk, right? Putting on new risk, right? In my opinion, like these names appear to, if you didn't own it or you owned it and sold it to start new positions up here, doesn't make sense to me. It just doesn't. Whether it goes up or not to me is irrelevant. It doesn't. Over the long run, you're not going to be successful in this game putting on new risk up here when everybody and their mother's in it and everybody's staring at it. Right? If Nvidia was to break out here and rip, every Ferrari steering wheel on Twitter, Ferrari steering wheel avatar, would be filthy rich because they were flashing their Nvidia calls. Right? You don't hear them talk about their Nvidia calls anymore. What happened? They got out? Oh yeah, I got out. This now again in the most bullish of environments, right? I'm not saying this Nvidia bull run is over with forever. Okay? It has to digest. They all do. They all do. They all do. Okay? And if they don't, the longer it goes higher without it, the bigger, right? We talked about the bigger the debacle when that time comes, when that music stops. You know what I'm talking about, yeah. They all got Lamborghini Ferrari steering wheels as avatars. I'm I saw a guy. I'm 17 years old. I'm trading since I'm 12. I'm a multi-millionaire option trader. Get the fuck out of here, you fucking. Oh my god. Give me a break, will you please? They make this option game sound so easy, right? Fuck out of here. Reddit could be. Reddit could be. There, let me tell you something. There was a really nice catchable rip in Reddit off some sweeper activity here. Now, granted, it's right back to where it was. Probably should have never ripped like that to begin with. But there was some buying here, and they ripped it hard. So this can definitely be a sleeper. Definitely. We saw a little October buying. What you would want to see is this thing hang out here, kind of like what ARM did. Remember ARM? So ARM had the IPO, went right down after that, and then we saw some really nice buying throughout. And here, that's where that big leap buying came in. But then you had earnings. That was the problem. You had earnings. Or even this one that I had a decent hit on, Cart. Oop, right? So to your point on the Reddit, this is what Cart did. IPO slammed down, everybody forgot about it, and then all of a sudden here, right where that arrow is, right here, it started to catch aggressive buying, aggressive sweeper activity. Right? That risk reward there, I mean, that's nice. All right. And again, to the point I'm trying to make is you're not always going to be right, but when you are right, you get that smoother trip because there are no sellers there. You know what I mean? There are no sellers. As opposed to, I mean, there are a lot of pain in the asses. Here's a pain in the ass, right? Like this is a real pain in the ass. There's no doubt about this is bullish. Okay? This is bullish. But this is torture, this stock. It's not an easy stock at all. And it's because a lot of people like this name. A lot of people are in this name. So, like, you got to cover your eyes and hold your nose. The trips aren't as easy. So, but yeah, ideally we would want to see newer stuff. Now the IPO market started to wake up a little bit, right? That once that started again, if that improves, that would also help. I just it's the economy, the environment we've been in. It hasn't been the most ideal for especially smaller mid cap names to grow. That's why it's been all about the big guys. It's been a bull market in the mega caps, no doubt about it. Um, but you got again, options are tough in a lot of these things, but you got some big winners in some of these electrical and industrial names. Look at this. Look, you got crazy looking stocks here, right? These moves are insane. So this is the stuff though. This is what I get concerned about. That I'm seeing a lot of this stuff. Like this needs to chill out now, right? Like this stuff needs to chill out, and it's got to move. The money's got to move elsewhere. GE, that's another one, right? Craziness. Look at that. I mean, that's crazy, man. Crazy, Tobias. Crazy. So, but listen, to my fault. I mean, this is why again, and I'm not ashamed to admit it. We're going to lie. From this, whatever you put it, let's call it a bull market because it's acted bullish. But this bull market, I've probably one of the worst bull markets for me, performance wise, that I've been a part of because of that lack of new leadership. Because for me, that's not my game, as many of you know. I'm not a big cap, mega cap player. I like to trade that stuff, extremely actively trade that stuff, if anything. I don't buy old names and hold them. If I own any of those names, I own them for years in a longer term account, and they're investments. They're not trades. I'm a stock picker. I like to find under owned situations. That's kind of my niche, right? And the sweepers help me find them. It's an idea generator. All chalk betting, exactly. Well said, Khalid. Right? And listen, sometimes that happens, right? Right? The bookies complain. This football season, it was all chalk. We didn't do as well. There's nothing you can do about it, right, Khalid? It happens. You got to roll with it and know that eventually, at some point, your cycle will come. Be ready for it. And when it comes, you lay down the hammer. But that's a good call. It's definitely been a chalky bull market. Great call. I'm going to start using that, Khalid. I'm going to steal that shit from you. Diaper traders. They are diaper traders. Listen, I don't like to see anybody lose money, but they'll be gone. All these guys, you know what I mean? You look back, if you're on Twitter, these guys will be long gone. I remember a few of them from when I first got on Twitter. They're nowhere to be found. Nowhere to be found. Yeah, that FLNC is one of those energy related names. And what was weird about this one in particular is they were buying short term calls. Really doesn't look like a short term type of stock. Now, I didn't even realize this. You had earnings, but no, that's in May. They were buying April's. Yeah. I don't know. I don't know what's going on here. Oh, you know what stock got hit that I own? ZI had a bad day today. But this is a shit stock. This is a shit stock. I'm still holding this, by the way. But honestly, like I told you guys, I wouldn't. This is one, if you don't catch news, you're more than likely not cashing a ticket. Now, why I say that, any other stock, you just the market going higher, the sector going higher, or the momentum in the stock could take it higher. You don't have to be right on news. This one, we're gonna need to whoever's in it with me, you're gonna need to catch news to make money on this thing. Because this thing is, I mean, look at it. This thing's ugly. You know what I mean? If it didn't catch that type of action, this is not what I'm looking for here. This thing is just a menagerie. But like even today, it's down. Look. I mean, look at this. Does it constantly? It's just a mess. But there's some private equity chatter behind it. That's the thing up the sleeve here. Private equity chatter. So we'll see what happens. Raymond James Carter. This FLNC. So what is this FLNC? This is a it's not energy, crude energy, is it? Or maybe it is. I think it's like let me see. Storage product services, artificial intelligence enabled digital application storage. Yeah, yeah. I mean, you got even AI in here. To tell you the truth, I if they hit like some calls with some time, I would find it even more interesting. But I wonder why they played, April's in this thing. Unless, like, what are they looking for? News? They're not trading this thing. This is not a stock they trade. You know what I mean? They're not buying April's because they're like, oh, it's going to go from 16 to 20. That's not what they're doing. The liquidity is not there for that. Yeah, yeah, maybe, maybe the AI gets picked up. Maybe they're at some conference or something. Possibly, could be, because that's what type of flow it caught today. That's the type of flow it caught today. There were some interesting sweeps today too, by the way. And then I got to run, but just taking a look at some of the names that caught some action today, there was some action out there today. Most of it early on. So here you go. GNRC. This caught a couple nice looking sweep, and had a strong move early in the day. Obviously, the market got killed later on. Um, this is a hurricane play. You guys know this name. This used to be the best stock in the world. Used to buy it every hurricane season and cash your ticket. Look at this. So you had a couple of nice sweeps with time. Well, one was May, one was November here in this GNRC. Another name that's what I'm buying today, repeat buying, Hims. I think a few of you liked this name or owned it. I remember we talked about this name a couple of times. So again, same thing, right? Big move. You're kind of late. You're looking for a dip. You got a little one here. They played May 10th, 14 calls. I actually day traded this Hims. Started off nice and then fizzled out. So I made a little bit of money with it. Nothing to get excited about. Yeah. Had a nice move off the action. I was looking for more, but it kind of died out here. So that was one. Again, that's repeat buying there. What was the other one? Let's see. Oh, this guy. This is another repeat name. This has been on fire, though. NTNX. We've talked about this name a few times. A lot of flow in this name. Look at this. Gone. I don't know what the hell you want to do up here. I don't want to do anything up here. And you got a little bit of consolidation here, but this is a hell of a move. And this one is the total opposite. Has been out of favor. What a catch? June. They went June 47 and a half calls. Okay action, nothing too crazy. This is a software name, I think. And then the Ambac, I told you. Oxy, May 70s, saw a little bit of action, more action today. This has been on a nice move. No, this thing, I mean, if you like energy, you might need time, but this thing has been long time now, right? Huh. That looks interesting the more I look at it. I know Buffett's in the name, but you see what happened here? Remember Buffett got in the name and every jabroni under the sun? I'm buying Oxy, but Buffett keeps buying it. Not realizing that Buffett holds for a lifetime and this guy's buying 2 weeks out. But, you know, those guys are done, right? They have no interest in Oxy anymore. If this thing ever gets out, it's going to get out. I know a few of you are holding it longer term. Looks good. And then another name was this Parker Hannafin. Yeah, this has been rallying too. So nothing too sexy. How do I drink my coffee? Is that a serious question, or is that a line you're running on me from a movie or something? I used to drink it black, but it kind of, as I got older, ripped my stomach. So now I drink it milk and sugar. I don't drink tea though. Coffee, a lot of it, a lot of it. CF, yeah. It'd be interesting these names if they start to get out from here. What a tough hold, right, Colin? What a tough hold. But you may get rewarded on this thing. When they get hot, they can heat up. That's what you see, like the gold miners. That's what I'm trying to do with the gold miners. I wanted to do it. You guys have heard. I brought it up numerous times. I didn't think they were ready. I didn't, and the flow's aggressive enough now to where I'm willing to roll the dice. I'm willing to roll the dice. They're overdue. Here, look, like let me show you the nugget. Some of you I showed, but look at this nugget here. I want I attempted. What the fuck's going on here? I attempted to do it something similar to this. Where was it? 2000 and it was here. Wait, 16. Oh man, it was this one. I think it was this one. I think it was this. I think it was this. Um, but same thing. This thing was just dead. Every rally sold. The gold miners were just awful. And then we started to see flow come in. To again, the gold miners in general, Nugget caught a couple nice sweeps, and the whole space got hot. This was, I remember, even before the market bottomed, we were in a correction, if I remember correctly. Anyway, uh, I sold this rip. You know what I mean? I wanted to hold, and I sold this rip, and I missed on the rest. Now we'll see. One first, let it make the move. We'll worry about the rest after it makes a move. The next thing is I got to try to hold through it, which is a whole other debacle. But it does it from time to time. These miners can get hot. When they get hot, they do it in bunches. They do it in bunches, and it's overdue right now. These things are overdue. Look at this, significantly overdue. Any bets on MDLZ? MDLZ. No, I haven't seen any action here. This is a food name, right? Nice little pullback here if you like it. They're making money, right? Yeah. Yeah, I know this name. I'm definitely familiar with this name. I haven't seen any notable flow bar that I can remember. Somebody mentioned BHC. That had a little bit of flow recently here. That had some flow. Any thoughts on rates? Yeah, Grant, I would lie to you and tell you if I had any conviction at all, and not even if I did. I don't know any more than the next guy. Um, but just as a disclaimer, you know, everything we're seeing now, I could have never imagined us seeing anyway. So, you know what I mean? I'm just being honest with you. I don't, the smartest people on the street have gotten this whole thing wrong. Yeah, we were talking about it the last couple of weeks. If you would have tell me that the Fed was looking to cut rates without any, with the economy showing strength and the market at new highs, I would have said you're fucking drunk. What are you, out of your bird? As they're battling inflation, right? Like election year or not, what are we talking about here? You know, what are we talking about? With gold and Bitcoin ripping, going bananas, the Fed's talking about cutting rates. So I really don't know. I really don't know. You know, I really don't know. I think there's just so many wild cards out there. There's so many wild cards. Is inflation here to stay? Yeah, I've heard that so many times. I know this time's a little bit different, but nothing would shock me. And so to answer your question, Grant, is that's tough to predict. Tough, really difficult. Why? Do you have any gut feel? You have any gut feel here? Yeah, I mean, the Fed probably doesn't want rates to start creeping too much higher, right? With the debt and everything else out there, but they could lose control. Who knows? Who knows? There's so many different ways this shit could shake out. So many different ways. You think rates come down? And I wouldn't be surprised. That Grant, from your mouth to God's ears, that's I mean, that's what I'm waiting on. That's what I'm waiting for, Exactly that. The underbelly, small and mid caps to catch fire. I'm hoping you're right, Grant. But honestly, I don't know. I don't even have an opinion on it. I really don't. I don't have not with any confidence. Yeah, I could see it going either way. I really could. I could see it going either way. I think there's just so many balls in the air. So many. But like I said, I mean, even like people, you could say it now, but I think you'd be lying if people told you the Fed was going to start this. First of all, this year, if you would have told me asked me what the economy would look like this year, I'd be telling you the complete opposite. You know, and then the Fed talking rate cuts would make sense, but I thought things would be ugly. Okay, and not ugly per se, Armageddon or apocalypse ugly, but some real slowing in the economy, some really real slowing in jobs, you know, and a lot of air coming out of the balloon. I thought that the Fed would want that to be done. So you put the dagger in inflation, kill it once and for all. You remember we should have never believed them. That's a whole other thing. But you remember what was being said. Damn the economy, damn this. We got to kill inflation. There's nothing wrong. What? Recessions are healthy. Corrections, bear markets are healthy. Blah 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 blah. We got to kill inflation. And the first sign of something cracking, the complete opposite. And that's why yeah, well, Khalib, you just took the words out of my mouth. That's why you have that right now. I think that's why you have gold and Bitcoin doing what they're doing right now. That's why you have them doing what they're doing right now. I think politics kind of got in the way here. Not politics per se, even trying to rig the game in a certain direction, but they don't want to get in the way of politics this year, right? They want to sidestep it, stay out of the way. Um, and the market sniffs that out. And the market's going to force them to do whatever it wants, plain and simple. It's what the market wants, not what the Fed wants. We all know that. Yeah, we forgot about that for a little bit, but we have jobs tomorrow. That should be interesting. That should be interesting. And I think that'll be a good tell because today didn't look like it was a Fed sell off, based off the Fed speak out there. I think it was more of the geopolitical stuff, and we'll see if anything shakes out overnight there. But I agree with you, Grant. I think outside of some sort of shock that is always a possibility, I think at worst they still buy the dip in small caps. You know, so I kind of agree with you on that fact. Like, and I think that's where the opportunity is, right? You get pullbacks in these things, and you don't even have to take too much risk. Like kind of what Grant is pointing out. Tomorrow you get a job number, right? It's let's say a nothing burger. You're getting a squeeze going on. VIX unwinds. Small caps could have a nice snapback tomorrow, right? And you could make some money by just reacting instead of predicting, what the future holds. Hop on some TNA or buy some IWM calls and possibly get a nice snapback rally. To Grant's point, but I hope you're right. Bigger picture that we finally see small caps participate. A lot of people think we need rate cuts for that to happen, but I hope we do because that's when I can prosper. That's my environment when the underbelly starts to get noticed. April 210s, IWM with some puts to hedge. Yeah, you could. Again, that NFP, you could see nothing burger and boom, they snap it right back. You know, would it surprise you even? All honesty, would it surprise you even if we're up tomorrow what we were down today? That wouldn't surprise me one bit, would it? Would that surprise any of you? Wouldn't surprise me one bit. Looking for a much bigger move on IW. I think bonds will. Again, I hope you're right. I would like what I want to do is get my hands on a little TNA. You know, that's what I would like to do. I botched the Soxel. You remember I wanted to do that with Soxel? I botched that up. But you know what? Maybe we get another opportunity here in Soxel off this digestion. Because if this bull market phase still continues, Soxel's going higher. Yeah, Soxel's going higher. Just may need to chop around here for a little bit. But I would like to play this DNA Grant and hop on your coattails. People think small caps too. They think right away micro caps, penny stocks. Small caps are not all $2 stocks. You guys probably are sick and tired of me telling you guys that, but when small caps get hot, anywhere $5 to $30 a share, you get some juicy setups. Juicy. And a lot of these stocks, they're like, you get a $9 stock, they go to 18, 20 in 2-3 months. Real nice moves. Yeah, exactly. Exactly, Grant. Exactly. Perfect point. Perfect point. That's where SMCI started. So I hope you're right, Grant. I'm rooting for you, and hopefully I can get on your side, with some TNA and all. I'll definitely be playing it intraday if it turns out that way. All right, my friends, I got to hop. Otherwise, I can stay on here till 9 o'clock tonight and talk shop with you. No baseball tonight, so Yanks are off. But I got a couple of things I got to do anyway. I can't believe tomorrow's Friday already. It's amazing. I say it all the time, but these weeks, we're getting older by the day. They fly by. Yep. Have a good night, Yaya. Be good, everybody. Have a good night. I'll see you guys in the morning. Take care, everybody.